stocks which are gaining are the oil marketing companies. Over the weekend, we got that petrol and diesel price revision. And let's get talking to the management of IOC. Mr. B. Ashok joins us from Delhi. Thanks a lot, Mr. Ashok, for joining us this morning. First up, apart from the price revision that took place, could you give us some details on what exactly was the volume growth in March and what kind of volumes did you do in the fourth quarter?
Let me talk of the whole year. I mean, quarter on quarter probably is not a good indicator. Right. On a whole year basis, last year the bottom line there was a growth of about 3%, all products put together. But when we talk of specific products, LPG probably has grown around 11 to 12%. Petrol has grown by about 8 to 9%. Diesel has been relatively flat, around 3% for the industry as a whole. And I would say that diesel, you need to consider that it has a much larger base. That is one. So it appears that the growth rates are not as much as the other products, but then even the 3% growth is quite a significant volume growth.
Okay. Mr. Ashok, we'll come back to, the company's fundamentals. Just per se on the price increase taken for petrol and diesel, if you could tell us what would be the marketing margins you enjoy on both these products post the increase in prices?
No, the margins have been quite stable. I wouldn't say that the margins have undergone any drastic shift. We are, as you know, that we are trying to do this fortnightly pricing to neutralize the impact of the changes in the international prices. We basically follow the international prices of products, both for gasoline as well as for diesel. And the international prices get factored considering the prices as such, and as well as the variation in the exchange rate. So this we are doing on a fortnightly basis. So by passing on the revision, we actually have maintained the trend of pricing with respect to international prices.
Margins
so margins have been almost on the same basis. I mean, there is no difference in the margins prior to price revision as well as now. We have maintained the margins. If we had not done the price revision despite increase in international prices, then obviously that would be a hit on us.
So gross margins closer to 2.7. Is that the correct way, rupees per litre?
Well, it's a little difficult to throw a number, but it could be anything between 2 and 2.5.
Right, Mr. Ashok. So you spoke about fortnightly revision of prices in line with the international pricing, but now we're getting news that there could be revision of fuel prices in the 5 major cities daily. How exactly does that impact IOC? What exactly would this mean for the company going forward?
Yeah, one thing is, I mean, on a pilot basis, a decision has been made that we would start doing daily pricing. I mean, ultimately, that's the trend that we would like to maintain. These 5 cities essentially are, Jamshedpur, Vizag, Udaipur, and Pondicherry and Chandigarh. We are doing it on a pilot basis, but hopefully the pilot should not be a very long pilot. And we would like to study the implication in terms of the market and how it's panning out. But in terms of a benefit, I would say that benefits are there for all segments. I mean, when you talk of the customer, I think pricing on a daily basis prevents shocks or sudden volatility. I mean, as you see over the last couple of fortnights also, there have been strong spikes as well as reductions which have been passed on to the consumer. So if you go on a daily pricing basis, these sort of volatilities will not be there. I would also say that customers on a larger base would probably not feel the impact. It would be a zero-sum game for customers on a longer basis. Probably earlier, because of the volatility, those people who are keeping an eye on the price trends probably could make a gain or a loss. But now, on a larger base, all consumers, they will, on a term basis, they will not end up losing money because of the volatility, or gaining money because of the volatility.
So what about for retailers?
Yeah, the channel member, I mean, I personally expect that the stock levels at the retailer would go up. Primarily because there has been, the retailers have been more sensitive to the volatility and keeping trends in the marketplace. So stock positions have been either increased or decreased depending on the trend. So going forward on a daily pricing basis, I think these impacts, I would say artificial distortions, would probably cease. So which would mean that they will maintain the requisite stocks which are required considering their average sales and so on. I would say from an oil company's perspective, it actually has tremendous impact because ultimately these sort of volatilities in terms of huge spikes in demand or lowering of demand also has an implication when you go backwards. I mean, towards the refinery. You must understand that the refinery is a 24/7 operation and it produces consistently. So suddenly if there is a buildup of stocks or a lowering of stocks, it could potentially have an impact on the throughputs of the refineries. I mean, if you really go on a basis where there has been a sustained drop in demand because of anticipation of a price decrease and all that. So I would say that it will stabilize. So it would be neutral for the company. It would probably help in stabilizing, and probably this cutting of throughputs or bringing in imports, etc., will get normalized. And from a retailer perspective also, there wouldn't be sudden spikes as well as losses for the retailer, and it will enable them to maintain a better
So you spoke about the volume growth for the full year, but you know, in the last 3 months, you know, ending March, we've seen a year-on-year decline in oil demand. So if you could just give us a picture of what, you know, the volume growth for the company is looking like. You know, I agree on a whole year basis, the numbers are looking quite good, but for the March quarter or for the coming quarter, has there been a decline in volumes? And if yes, what would you attribute the reasons, you know, for that?
Yeah, last quarter, actually, there was some amount of dip in the market, but I would also say that partly some of these things are because of the volatility in prices. There has also been an impact in terms of the number of days which were there in the last quarter, especially February. You know, there was a drop in demand, but if you must consider that if one day more is there or less is there, it would impact the sales by 3%.
So what exactly would the
on a 30-day basis?
So what exactly would the impact on inventory be? What exactly would the inventory losses in Q4 be?
No, I don't anticipate any sort of inventory losses in Q4, though there was a drop in prices towards the middle of March, though prices have come up again. So the impact of that could possibly be seen towards the first quarter of this year. But then having said that, since the prices have again started moving up, so I guess this impact would also get neutralized.
And just one word on how the GRMs looked, sir, in the Jan to March quarter? And how has it been in the first 1 month of this, or the first 15 days of this month of April?
GRMs have been quite robust, I would say. I mean, the cracks, the difference between the product and the crude prices have been relatively stable. So we think the GRMs should be good. More importantly, I think it's also dependent on our operational performance. I think last year, particularly, our operations have been outstanding. In fact, we think we have set new benchmarks in terms of refinery operations as well as pipelines and marketing and so on. So I think on a combined effect, because of the better operational performance of the refineries, I think the GRMs should be quite good.
Right, Mr. Ashok, we cannot let you go without a quick word on the update on the IOC and Chennai Petro merger. Can you tell us what's happening there?
Well, I mean, certainly, you know, Chennai Petro is doing well. At this point of time, they have come out of the difficult period that they were in. But again, having said that, we need to consider the future of Chennai Petroleum, and some of the considerations include expansion of the refining capacity there. So we need to infuse a lot of funds, and because of the infusion of funds, we need to look at what are the possibilities, from where will we source these funds. Obviously, Chennai Petro has stakeholders even from outside of the country.
The timeline
so
on the merger?
Discussing with them. There is no timeline that I can state at this point of time on the merger because of you know, other stakeholders being there. We are trying to work this out.
Okay. Thank you very much, sir, for your time this morning. That's the word from IOC. We'll slip into a very